Ryanair's profits meltdown raises questions over the industry's health. Welcome to Market Insight. I'm Ludovica Brignola. Ryanair shares were tumbling today as the company posted a 46% fall in its second quarter profits after tax. Ryanair and other airlines have warned of pressure on ticket prices in recent weeks. So is the industry's post-pandemic resurgence waning? Well, to help answer all that and more, I'm joined by Fiona Cincotta, Senior Market Analyst from Citi Index. Thanks for being with us today, Fiona. So Ryanair's quarterly profits after tax fell nearly 50% in the 3 months to the end of June. Fares will also be lower than expected in the coming months. What's happening there?
Yeah, so this is a sign that this post-pandemic boom that we've seen is really starting to come to an end. We've seen 2 years of very strong growth in travel demand. And I think what's happening is now that household budgets have been squeezed to the point where travel is coming under pressure and demand for travel is coming under pressure. So obviously we've got interest rates are at, sort of 16-year highs in the UK. In Europe, they've been at record highs, although the ECB has just cut rates in June. But, broadly speaking, interest rates are high, pressure on household budgets are also high. And it just means that the amount of sort of available funds for spending on discretionary items and travel has reduced. And that's what's impacting the airlines.
Right, so pressure on the travel sector. We know EasyJet is also set to report later this week. And what do you expect on the EasyJet front?
I think what we can expect is a similar story to what we heard from Ryanair, concerns over sort of weaker airfares. Obviously, we've also got to bear in mind that we have had this difference with the coming of Easter and the timing of Easter and the quarter that it falls in. So that does affect things as well. But I think broadly speaking, this idea of airfares being reduced is going to be putting pressure on airlines' revenue and also their profits.
Right, and Fiona, the European bank's earnings season is also starting this week. Are you optimistic about it? And how do you think the higher interest rates will have impacted those second quarter earnings for the banks?
Yeah, so I think it's interesting. And I think what we've learned from US earnings season is depending on how much exposure banks have to investment banking side, sort of M&A activity, which is sort of really seeing a resurgence, will depend on really how well these banks are doing. We've seen in the US that those that had a greater exposure to investment banking actually outperformed. And I think we can probably expect to see that trend in Europe as well. I mean, if we're looking at UK banks' performance and expectations for their earnings this week, we've got Lloyds, which is due to report ahead of the open on Thursday. They're expected to see a relatively large decline in pre-tax profits, and that's basically as we're seeing those demand for lending slow. So if we think about Lloyds, it's the UK's largest mortgage provider, and as we've got these high interest rates and people waiting for rates to come down really before they make a move with mortgages, that's starting to affect demand for those loans, which I think is going to be impacting the prices. So, as we get the expectations grow that sort of, the Bank of England could start to be moving to cut interest rates soon, we're seeing that households are just holding off or people are holding off from accessing on mortgages in order to wait for those benefits. And so I do think that's going to be affecting the mortgage demand. And that means that sort of Lloyds and domestically focused banks are probably going to be having a tougher time than those that have that exposure to the investment banking industry.
Interesting. We did see an unexpected rate cut today in China, right? We know LVMH is set to report profits tomorrow. How do you think the luxury sector will react to those rate cuts in China?
Yeah, the luxury sector has been very much under the spotlight and for all the wrong reasons recently. I mean, if we think about Burberry's results that we had, we saw a tumble in the share price after a profit warning there. And again, that's very closely linked to the weaker demand that's being seen in China as the economic recovery there is sort of bumpy, to say the least. And I mean, we have seen this share price cut, this interest rate cut, and that is going to be sort of relieving some pressure on the consumers, as it does affect the mortgage rates there. But I do think on its own, it was actually just quite a small rate cut. If it had come with sort of potentially a bigger move with fiscal support as well, then we might see a quicker recovery in consumer confidence and in the sector. But I think, on its own, it might be just too small to make a really big impact on consumer demand, on the recovery of the consumer in China, and therefore on sort of spending and the luxury sector.
Really great analysis, Fiona Cincotta from City Index. Thank you very much for being with us today. And that is Market Insight. Don't forget you can watch more videos on Reuters.com.